The U.S. stock market is experiencing significant declines for the second consecutive day, following President Donald Trump's announcement of sweeping new tariffs earlier this week. On Wednesday, President Trump introduced a minimum 10% tariff on all imported goods, with higher rates for specific countries: 20% on the European Union, 25% on South Korea, and 24% on Japan. Additionally, a 25% tariff was imposed on vehicle imports and on non-USMCA-compliant goods from Mexico and Canada. The market reacted sharply to these measures. On Thursday, the Dow Jones Industrial Average plunged over 1,600 points, marking one of its most significant single-day drops in recent years. The S&P 500 and Nasdaq also experienced substantial losses, declining 4.9% and 6%, respectively. The downturn continued into Friday as China announced retaliatory tariffs of 34% on U.S. goods, matching the rate imposed by the U.S. This escalation intensified fears of a global trade war, leading to further sell-offs in the market. Investors are increasingly concerned that these tariffs could lead to higher consumer prices and potential inflation, impacting both corporate profits and consumer spending. Despite the market turmoil, President Trump remains confident in his trade strategy, predicting a market rebound and asserting that the tariffs are necessary to protect U.S. manufacturing and reduce trade deficits. However, bipartisan concerns have been raised in Congress regarding the potential economic fallout, with some lawmakers introducing legislation to limit the president's authority to impose tariffs unilaterally. As the situation develops, market analysts and investors are closely monitoring the potential for further retaliatory measures from U.S. trading partners and the broader implications for the global economy.